Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of corporate filing so you don't have to. Today we are diving into First Commonwealth Financial Corporation's latest report, and let me tell you there are some interesting numbers and a dividend payout that caught our eye. First Commonwealth Financial Corporation, a company that has been around for a while, is filing their regular updates with the Securities and Exchange Commission. Think of these filings as the company's report card to its investors and the public. Today we are looking at their most recent report, which covers their financial performance and other important company news. This specific filing is an 8K report. This is used for significant events that shareholders should know about right away. It is like the company shouting out important news. In this case, the big news seems to be about their financial results and a dividend. This company's stock is traded on a major exchange, the New York Stock Exchange, under the ticker symbol FCF. This means regular people and big investors can buy and sell shares of First Commonwealth Financial Corporation. Alright, let's get to the juicy part, the financial results. On the 28th of October 2025, First Commonwealth announced their financial results for the 3 and 9 month periods that ended on the 30th of September. 2025. This is what everyone wants to know. How did the company perform in the last quarter and the year so far? The report includes a press release detailing these financial results. Usually companies use these press releases to highlight the good news and put a positive spin on things, but we are going to dig a little deeper than that. We are looking for the underlying story in the numbers. Now, this section usually talks about how the company is making sure everyone gets the same information at the same time. In this filing, it is also where they announced a cash dividend of $0.135 per S-share of the company's common stock. This is basically the company sharing some of its profits directly with its shareholders. A $0.135 dividend. Per share might not sound like a lot, but when you own a lot of shares, it can add up. It is a way for the company to reward its investors. And as with most filings, there are exhibits. These are the supporting documents. The main one here is Exhibit 99.1, which is that press release we just talked about. This is where all the detailed financial tables and dividend announcement would be found. The report is signed by James R. Gay, who holds a pretty important position as Executive Vice President, Chief Financial Officer, and Treasurer. This means he is a top financial executive at the company and is attesting to the accuracy of this filing. So what does all this tell us? First Commonwealth Financial Corporation is reporting its financials and also distributing some of its earnings to its shareholders through a dividend. This is a pretty standard move for a publicly traded company. Now, looking at the numbers themselves, which we would find in that press release, we need to see how these results compare to previous periods and to what the market expected. For instance, if their earnings per S-share are up but their revenue is down, it suggests they might be cutting costs effectively but not growing their top-line business. Conversely, if revenue is up but profits are down, it could mean they are spending more to achieve that growth, perhaps on marketing or expanding services. For a financial institution like First Commonwealth, key metrics to watch include net interest income, loan growth, deposit growth, and asset quality. Are people taking out more loans and are they paying them back? Are more people depositing money with them? Rising interest rates can impact their net interest margin positively or negatively depending on how they manage their assets and liabilities. We also want to see if their efficiency ratio is improving, meaning they are operating more smoothly and spending less to generate revenue. Any significant jump or drop in their provision for loan losses could also signal future challenges or strengths in their loan portfolio. In terms of strategy, is First Commonwealth focusing on organic growth, meaning growing from within by attracting more customers and offering new products, or are they looking at acquisitions to expand their reach? The dividend itself suggests a level of confidence in their ongoing profitability and cash flow generation, which is generally a good sign for investors. A consistent or increasing dividend is often seen as a sign of a healthy and stable company. However, we also need to be mindful of the broader economic environment. Is the economy strong, allowing for more lending and investment, or are there signs of a slowdown that could impact loan demand and increase the risk of defaults? Competition in the financial sector is also fierce. Are they gaining market share, or are competitors eating into their business? So, to sum up, First Commonwealth Financial Corporation is providing its investors with an update on its financial health and rewarding them with a dividend. While the report itself is a formal document, the story it tells is about the company's performance, its commitment to shareholders, and its position in the financial landscape. We need to see the actual numbers in Exhibit 99.1 to provide a definitive assessment of their performance. But the fact that they are issuing a dividend is a positive indicator of their current financial standing and their outlook. Alright, that is our quick decode of this filing. What are your thoughts on First Commonwealth Financial Corporation and their dividend? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more. And don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we will see you in the next one.